Hi, this is Steve Lachance with Integrity Mortgage. I'm here today with Stephen Lavallee, Integrity Mortgage also, and I'm very excited to be working with Steve. Steve I convinced him to come on the show today because one of the things that is really hard to do is when you get into video podcasting, it gets a little scary. But Steve is a genius when it comes to loan programs, and I'm honored to be working with him here at Integrity. And Steve, we're going to talk about today, well, first of all, welcome.
Thank you. It's funny for the guests that might be watching this, we're both Steve L's, so we get each other's emails frequently.
Steve L.A.
L.A.'s,
Yep.
And we share the same birthday in August.
Oh, that's true, too. I forgot about that.
I think I've got you by a couple of years, but yeah, so it's been great. And Steve and I've worked with each other off and on for years, and it's great having a very knowledgeable, helpful, honorable loan officer.
Well,
so thanks.
I feel the same way. And so today we wanted to talk a little bit, though, because you and I were just before we started recording talking about this spring market that's coming. What's it here like in 2 days? So we are about to see spring hit. The warm weather is imminent at this point.
Hopefully.
What's your crystal ball saying?
Well, the crystal ball is I hope there's more homes on the market. I've got a client coming up from Pennsylvania in the $500,000 to $800,000 range in Greater Portland, and they're coming up on Monday to look at homes, and they have a total of 3 homes to look at. Okay. So that's just not sustainable for any of us, and I think we've felt a little slowness in the market, year to date. My guess is with what's going on with interest rates and with world politics, that hopefully, the people that I've talked to think that there's going to be more homes on the market. People are going to, quote, cash in now. Values are great. Yep. Get ready to list. And so let's hope, right?
Yeah. As we see interest rates on the rise, with the Feds talking about more hikes in the future here, it's more about what they say than the actual hikes themselves, because we see it in our industry. The pricing is already built in when the Feds make these rate hikes. But as we see that rise too, we're also seeing some of those first-time buyers getting inched out of existence.
Yeah, it's really sad with the values. We've both been in the business a long time in Greater Portland, and to see what first-time home buyers are having to do, either dollar-wise or making offers without inspections.
Right, that's a dangerous thing. It's happening a lot, but and I get it. I mean, you have to understand.
You got to win the offer.
You got to do something if you want housing and you want to get there and be competitive. There are still some creative ways that we can talk on a different show about how to win in a multiple offer situation.
Yeah.
But for the moment, I think what I'm predicting is the spring market will be busy as always.
Yep.
The inventory typically comes on year after year, about the same number of listings. There's just a bigger pool of buyers every year now.
Yeah.
But what the big thing is that it's making it real tough for Mainers is to compete against the out-of-state buyers. I would say a vast majority of my buyers right now are still flooding into Maine.
I think that the statistic you hear is 33% or so were out-of-state buyers last year. It seems higher, and maybe because we're in southern Maine. Because, and they're able to work remotely, and that's a big part of it. Is
a lot of them bigger incomes from states that have a higher median income limit or income levels. So we do see that being a factor as well.
That is, yeah. So I've got 3 young adult children, and would love for them to come back to Maine. And used to say, "Oh, come back here, and you can afford a house." It's getting a little scary.
Yeah, a little tough. Yeah, and again, I think the biggest problem is the inventory. And as we see this, if we do see the numbers continue to grow at this pace, not that we're going to see a bubble, but we could likely see not deflation but a recession. It's very possible.
I do not think again, southern Maine, that there's going to be a bubble.
No,
with values.
Not for values.
But could it flatten? Will it flatten? I think with what's happening in the world and with rates creeping up, I did an analysis for someone that's been looking for a year, and the rate is 1% higher.
Yeah.
And it's a decent sized loan, but it's a couple $100 more a month.
Yeah.
And that is going to change things. So either less people are going to be able to, and I don't mean to be doom and gloom. We're in great shape and values are spectacular, but I think they are going to level a little bit. I hope
that's a good point
for our young kids.
The gloom and doom story is a good point, because one of I had a customer talk to me the other day saying that they were very upset about the interest rate increases, and they're seeing it almost 2 points from where they were because they started shopping at the beginning of the pandemic, and looking at it now, going, "Holy cow, what happened? Why are my numbers so much higher?" And in reality, of course, that's going to happen. But look at how long have you and I been in the business and where rates have been. We are still in such historical levels. Someone was going to pay cash recently. It's actually a good realtor friend of mine, pay cash for a condo recently, and she said, "What if should I pay cash? Should I finance it?" Obviously, I'm biased. I'm in the mortgage industry, but when I did the math and I said, "Well, okay, well, yeah, rates are 4.5 now." She's like, "Oh my gosh, 4.5. What happened to 2.5?" And well, granted, it's gone, but at 4.5% on that particular transaction, are your assets going to earn you at least that much? And of course, they were going to earn well over that.
And just staying liquid. The older I get, the more it's like you need money available, whether it's in the stock market or whether it's in a savings account. Just should there be a roof, collapse and you need to do something, or a furnace, or a car, or all of a sudden life changes, and cash is still king. So to have available, or liquidity is king. I don't know why people are paying cash except to win the offer.
Right.
And then we've got some programs that can help those people.
Yeah, actually, you bring up a great point. So I want to say thank you too for agreeing to join me today. And when we come back next time, can we talk about that? It's called delayed financing.
Yeah.
And this guy's done some research on that. Delayed financing is for cash buyers that want to be able to go back and recoup that cash, but win the offer and then get your money back.
Yeah, and
after.
you used to have to wait months and months, and now you can do it immediately. So yeah, it's a great program, and we talk about it with brokers.
Yeah, so we'll do it on another segment.
Sounds great.
Thank you so much, guys, for listening. I'm Steve Lachance with Integrity Mortgage,
And I'm Steve Lavallee. So great first time.
Yeah,
we'll
excellent.
do it again.
Thanks, guys.
Bye-bye.
Bye-bye.